All right. Today is the 3rd of January 2023. Happy New Year to anyone watching this video and listening. Hope y'all are doing awesome. Now, straight into the EU. I'm on my 1 hour chart. So on the left hand side of my screen, I've got my buy side drawings, and on the right hand side of my screen, I've got my sell side drawings. Both are the exact same chart, 1 hour outlook, and it's just I draw on both sides of my screen here so that I can keep my charts as clean as possible. Now, to anyone who's seen any of my videos at all in the last couple of weeks, you will know that we have entered into this higher time frame order block that can be seen along the 1 hour, 2 hour, 4 hour, daily, and weekly timeframes. On the monthly, it just looks sort of like an initiation like this, and it just looks like a sort of a candle, just a one candle. But on the weeklies, it is what I call a sell primary. A sell primary is when we range and initiate prices, breaking structure, come back in, take the liquidity from above that range or below if this is reversed, and continue down, breaking structure upon itself, but also upon major structure. This, from this low point here to this high point here, then becomes what I consider a sell primary. These are the best types of ranges to trade off of. Why? Because they're the range that took liquidity and have confirmed direction through structural breaks. This happens on the every time frame: monthly, weekly, daily, 4 hour, 2 hour, 1 hour, all the way down to the 1 second. All right. So when I see this formation, we'll just call it a formation, but when I see that formation, I am interested. So let's zoom out. Let's look at the daily. Let's see what I'm talking about. Range, initiation, break of structure, break something to the left hand side of my screen. Price then can from this low to this high comes up and initiates away, breaking itself, which concludes formation, but also breaking structure, another essential piece of structure down here, right? Did we break down here even? Yeah, we even broke down this low here. What that does is it gives massive, massive, massive weight to this range, in my opinion. So this range right here has been my higher time frame outlook for a long time. I've been looking at it, very interested in it. When we see things like this, mitigate here, touch this is very much so an order block that is holding price and that has a crap ton of orders. It is also the range that took liquidity, extremely extremely important. So as we enter back into that range, yes, we've had an open touch. We call this a touch on the open. Right, here's the open. So as price is sort of wiggling its way back in, what are we seeing here? Well, at first we were interested in this range. At first we were expecting this range to hold, and so all through sort of November and December, we were kind of like looking at that range. And then as soon as that range got popped and taken, the high got taken, it became very interesting as we didn't really know what to expect. However, if you look at this on the daily chart, you can clearly see that from this leg here, this low here, there was an initiation, and I'm going to turn off all my drawings now. There's an initiation from this leg here to this top here. That leg right there took liquidity, number one, and mitigated something in here at the very top end of this range, the range of interest. So when I saw that occur, I'm extremely interested in seeing what it mitigated. And so if we go back into our lower time frames, we don't need this drawing now on our charts. We can actually see from our lower time frame that this was the last known unmitigated sell primary that we had in that higher time frame range. So here's that range again, right? Drawn on here, something like that, a bit higher there. Notice how this leg here came up, wrong tool, came up, took liquidity and bounced down. Here's that, the range, the break of structure, the stacking of money. Then this guy comes in, um, takes the liquidity from from above here. I was thinking, was it you that took liquidity? It wasn't. It was this range here that took liquidity and initiated lower prices, breaking structure here, creating this or causing this to have to be another heavily weighted order block. Primary. I call them primaries for a reason because they are the primary ranges. So when we see something like this happen, which is your typical wick, right, on any time frame, like yes, it's fast up and fast down is what it is. Fast up, fast down. That's a wick. And so when we see a wick like this mitigate this last known sell primary that was left unmitigated, and we see an initiation away, and we see a sell primary form in this area, it's like an immediate knowing, I guess you could say, or immediate expectation that this will hold and at least have a reaction away, right? We don't know if this is going to be the cause for lower prices from here on. We really don't know what's going to happen from here. It seems logical that they would run or want to run a lot of the liquidity in this area. We've got liquidity here, and we've got liquidity here. So anyone entering here, anywhere in here, financial institutions, remember what type of year it is as well. This is December, and what is it, early November? No, this is all a December range, right? From the 15th to the end of the month. So think about it. As people are doing stuff with their books, right? They're closing their books. That's what financial hedge funds and financial analysts are doing. Why do they do that? Why in this period of time do they do that? Because this is bonus time of the year. So it's logical for them to want to close out positions. One way in which they can do that is by holding price in and around an area and getting in and out in this area, right? So this is what I suspect has been happening. We've transacted a lot of shit in this area. Buying, selling, whatever it is, they're just getting out of their position, closing the trades out so that their books for bonus time, which is coming either end of year bonus or it's going to be around sort of next few months or whatever, tax month. I don't know when they close, but they're just wanting to close before the end of the year. Okay, so they're out of here now. Now they can let the bonuses roll in, right? Line their pockets. Good for them. Awesome. So we've got this high here. Now, when price zipped up to here, it didn't look like a mitigation. It didn't look like a whoop, whoop, like a big solid push away. It didn't look like what we were expecting it to look like. And so, because of its lack of speed away, yes, this is speed right here, but this up here is not speed. This is accruing their position most likely. But because of that, it's likely then that there's going to be a lot of orders here, a lot of liquidity, and a lot of reasons to come back up here and take it. So I am seeing signs as to why this high will get penetrated, as will this one. This is basically equal highs. And as we know in the marketplace, anytime you see relatively equal highs, we will run them relative to the time frame, right? So look at this. They're on the 1 hour chart zoomed out. It's highly likely then that we could have initiations all the way down here and this be over on the other side of our chart before we even need to start thinking about coming up for those equal highs. You don't have to come get them all the time. Like every as soon as you form them, you have to come back. It's not like that at all. They're stacking this for a reason. And then, if you were to go into your monthly chart, right, we can clearly see that they've done similar things like this, but it's relative to this chart, right? So relative to this time frame. So we've got some equal highs here, relatively equal highs, right? Relatively equal highs again. And so again, relatively equal lows here, and yet sure enough, they pushed them up and then they ran them. So they will get taken, in my opinion, but it's just going to be relative to the time frame. We could be talking like in a period where I'm no longer on this planet that they're actually going to take these highs, you know? We could be talking 2063 and beyond, all of this kind of stuff. And, you know, I'm no longer a part of this physical Earth. Anyway, we've had our mitigation up here on the sell primary. We've had another mitigation, and I always look at what we've mitigated. 1 minute sell primary, and it was like the last one. That was what was so significant. Like if you actually look up here, just before they initiated their prices further down, they actually created this 1 minute sell primary and pushed price lower. So when we see that, it gives us weight to get into the marketplace. I didn't know it was going to drop like this. I'll be honest, when I see it drop like this, I was quite happy because I see that I a was kind of correct with my thinking, but also it gives us a new opportunity. We're finally out of this range, so it's going to give us a new opportunity to sort of transact in a different area and create something new, which is exciting to me because I like to see how they're going to deliver price. I like seeing the delivery of price. It's very interesting to me how they do it over and over and over again. Same thing, just in different variations all the time, and I like seeing that. So finally out of this big old range, we're definitely going to be coming back to it. Let's have a quick talk about just this right here, just before we move on to our lower time frame. So when this occurred, we actually had built, this is a buy primary, so it actually looked a bit like this on my charts because we had a range here, range initiation, breaker structure, they stacked liquidity, this range came in, boom, initiated higher prices. I don't think we broke structure to the left, but it didn't matter in this instance because we're thinking this is a higher time frame instance, and so we can definitely play off of it for our RIMC, our range initiation, mitigation, continuation. So that's what I was thinking with this range when it got put in, that we would just be buying somewhere off of here, somewhere inside of this range. We'll be looking to continuate longs. What happened was it became transitional, meaning that the low got taken out, and it's become transitional because of the speed. There was no mitigations. Look, all this transacting that we had in here, all of this has not been mitigated at this point. Okay, so as we see price zippity doo dah back into this area, again, this is exactly something I said on my charts when or on my videos here when I saw this had landed here. I said we are likely, very likely, to spend some time in here in this box. Why? Because we need to mitigate this stuff. This stuff's got to be mitigated. It has to be mitigated. So when we do a transitionals will always become liquidity, and so it's just a matter of time because they're creating something new. So it's just a matter of time in this area. No one knows how long. And what happened? Sure enough, we did. We spent a shit ton of time. And so at this moment here, when we're sort of seeing, trying to trade off of this like complex range, we're seeing buy primaries get put in, sell primaries form immediately after. But this was the last one that we had that took liquidity, initiated away, and we're able to play this range initiation. Here's a range that occurred from the B to C leg inside of the primary. And if you don't know what I'm talking about, go back on my previous videos and you'll find out. And on these B to C legs, they form something, typically at around 50% or lower. And in that formation there, it's a good place to bounce from. And so we're always looking for that kind of activity to see on the higher time frame to bring price, say, down into here or down to here, and then form a buy primary again, which is a good signal that we're initiating higher prices. That's what primaries are used for. They give us information about, hey, we're taking a liquidity and now we're moving in a different direction. Well, you can do that on a 1 hour, you can do that on a monthly chart, you can do that on a 1 minute chart. So on a 1 minute chart, when we see these initiations away in whatever direction, we can trade those as long as they align with the higher time frame outlook. And that's what I do here, right? So I can clean up all this off my chart. It's no longer relevant. I'm going to just leave this one on the transitional just for, just so we can sort of see. There was a buy primary, a sell primary up in here, low time frame, just before this large initiation. Highly expect price to come back. From this point down to here, I believe there's only one primary, or maybe two. Oh, we'll see in a second on a low time frame. Actually, I think there's three. I think there's sort of one here, and then the last one is in like this area somewhere in here, just before the initiation. Could be this high here. So we'll look at those anyway. We'll look at those, not in too much detail, but we will definitely see them in a sec. That's really all I wanted to do and cover on the higher time frame. We can see we're in a range. We can see we're initiating away. So where are we going to land? You know, this is the age old question. Where are you going to land? Well, if you don't know anything about primaries, then you won't know or to expect to land inside of a biprimary, right? But here's the last known biprimary that I have identified, which was right in here. There was liquidity here, range, initiation, break structure. It was this range right there that took the liquidity, boom, broke structure. So this is completely valid. And so we can just ray this over to this side, and you can see that, oh, look, we're actually stopping and bouncing inside of this one. If you analyze all of this stuff here too, I believe that there wasn't a clean primary. There's a weak primary right here. I call them weak because this one just ranged here, initiated, no break of structure, came back in, took all the liquidity, and then initiated. So this to me is more like a liquidity reason, and I think this is actually created to distract, confuse traders. I really do. I believe that these sorts of movements here could be formed for that purpose. It might be something completely different as well. I was listening to something just recently that they were talking about how stop hunts. We all feel like as a trader in the marketplace, we feel like the market makers use stop hunts tactics a lot, try to stop us out, take liquidity, and they're saying, from my understanding, is that that's actually bullshit, not something that actually goes down. Whether that's true or not, who knows? Anyway, you can see what did I just say? I mean, I didn't even know it broke, honestly, until this just second here. Boom, range initiation. This looks like a primary, it's not. And what happened? Price slams all the way through it. And so this was just for liquidity creation. Is this a low that's going to hold? Who knows? We're in a biprimary. That's all we need to know right now. Are we forming lower time frame biprimaries? If we are, then this low could hold. And if we form a higher time frame biprimary that's valid, that we can play off of, we should enter and expect higher prices, maybe to bring us back up to here, maybe to just bring us above this high again. Maybe there's something else they want to mitigate. Now, hang with me. Okay. So let's go to our lower time frame and let's look at this. This is our sell side, right? So we've got this big initiation. Now we're on a 1 minute chart. Okay. So anyone again not familiar with the way I keep my charts, on my left is my buys, on my right hand side is my sells. I try to keep these two at the exact same time frame. So if one's at 1 minute, the other should be at a minute. Sometimes they get a little off. I'm looking at 15 seconds a lot of the time as well. But I always keep my drawings as buys on the left, sells on the right. Okay, so anyway, onto my sells, because that's the first thing I'm thinking of, right? Hang about, we've just initiated away all these lower prices, and this is just gubbins up here. And so I'm looking at the mitigation, right? We're pulling price away. I've identified some sell primaries. We can redraw those on, but there was just a couple that I noticed. But this here was very cheeky, but we'll definitely spend some time drawing it on because it's good. There it was. Okay. Sorry, it just took me a second to get my bearings. All right. Break structure. Range, initiation, break of structure. Right? There's the range. There's the initiation. There's the break of structure. Here's the stacking. Oops, sorry, wrong one. Here's the stacking of liquidity. They took it from here as well. So these are also ranges that are involved with this movement. So we've got a range here. This one right here. So we've got three ranges. Range initiation, range initiation, range initiation, boom, break of structure. Okay? What that does, stacks liquidity above all of their tops. Price then comes in, from this low point to this high point is as simple as that, and it becomes a sell primary. Why? Because not only does it break on itself, not only does it take the liquidity, first of all, that's the first action it does, it takes the liquidity from above that range. That's action number one. Action number two is it breaks on itself. So now you've gone A leg to B leg to C leg. B to C is our area of interest. And we will be monitoring what happens when price comes back here. Now, this hasn't activated until we get another break of structure. Major break of structure. How's that? How's that? Not out. Coming from my England days. Right. Anyway, there is the primary, fully formed in all its glory, right up the top, completely 1,000,000% unmitigated. We will see a reaction from this. If price does not react from this, and I'm wrong, and price rushes through it, it will 1,000,000 zillion trillion billion percent. I feel, and I'm not. You can't be positive with anything in the trading markets at all. When you're trading, there's no certainty in anything. But I'm confident in saying we will react out of here. This area will experience a reaction, and I believe it will be a strong reaction. It's the last known sell primary before the initiation. Extremely, extremely strong, in my opinion. In fact, so strong that I would risk immediately something like that, a 10 pip stop, and go and just put a risk entry. That is how confident I am that this would have a reaction. Price could easily whip through it though, and then react afterwards, becoming a transitionary. Price can react like this, zip through, come back and react. But price can also zip through again, and then react before pushing down. Okay, so price can do all kinds of stuff really, but I would put I would anticipate. I was going to say I would put money on it, but I would anticipate a reaction. So that's a really good order block. So anyway, prices come down. I get to the charts around sort of 7 o'clock ish, somewhere around here, right? So I'm looking at my chart, and we've had this mitigation already. I didn't see it live, and the first thing I do is go, what have we mitigated? And so I draw an arrow, and I draw it over, and I see that this arrow is here, right? So I've pulled it out, it goes all the way over to here. So what's significant about this? Well, I look at it and I'm going, what is significant about it? Maybe everything we've just been talking about. Range, initiation, break of structure, comes back in, takes the liquidity that was stacked from below, initiates higher prices, breaks structure on itself, and eventually breaks high time frame structure as well. Ergo, therefore, activated. This is a range that is activated. What we call, when I say activated, it's a solid range initiation, mitigation, continuation style of a range. It should 100% of the time receive a reaction. What happened was price came in, reacted, price came in again, reacted, and we got higher prices. So this range was the cause of several breaks in structure. This range held price for the longest time. And so if this range is that powerful and it's a primary, a biprimary, what do you think it can do to the other side of our screen, right? Once we've slammed through it, could it hold price again? Well, there's potential. So this is the unmitigated part of the range. By unmitigated, I mean if you took this range and just kept drawing it down and down and down and down until you get to a point where prices stopped mitigating it, you're left with this section, this nugget of the range. And as we can see, let's go to 5 minute, might make things easier. There we go. Now we can see it a little bit better. So we've got this range here that hasn't been mitigated. And what happened? Price came straight back into it and mitigated it. And so I write immediately on my chart, what have we mitigated? A biprimary. So a biprimary that's been turned into a transitional. I really should have it turned in this color, but on my charts. But I liked having it in the blue because it just helped me realize that it was a primary rather than a transitionary, because transitionaries always become liquidity. Now, I believe this will become liquidity as well, but I do believe because it's an actual mitigation that we can have a break of structure, right? We've mitigated a buy primary in a transitional fashion. So it's a good indication that this is going to hold of something, right? So now let's pull down to a 1 minute. And so all I'm observing in the marketplace is this forms in front of me. It was literally a setup that I couldn't really pass on. So I'm just observing price. We've had this mitigation here. I'm not jumping into the market straight away. I'm going to wait. I'm going to set my hands. Why am I going to do that? Because I want to trade off of primaries, not just fucking willy nilly trading, hitting the buy and sell button whenever the fuck you feel like it. No, we're professional traders and we're here to make goddamn bank. So let's do it. And the way I make bank is by trading off of primaries. Um, I see range, initiation, a break of structure, boom, come in. And then what am I looking for? Ideally, I'm looking for this break of structure here before this range activates. That's really what I'm going for, right? So let's just let price kind of take care of that. There we go. Let me clean up. So now we're down on our 1 minute. We've got this block here, which we should talk about on the 15 seconds, because what's happening again, right, is we need to analyze on this primary that's formed and hasn't fully activated. Remember, you could take this as the breaker structure, and I think I was actually using this low as the break, but this is the one. This is the break and structure you really want to be looking for before this is activated, in all honesty. Anywho, I took that as the break of structure. That's my understanding. And so as soon as it had taken that, I'm thinking, okay, we can trade off of this. So let's see where we're likely to trade from. Remember, we've made an A to B, and this is going to be the C point, right? Like right here. So what happens between B and C? That's our interest, because this is the range we're playing off of. Here's a range, an initiation. It's in the lower 50%, so it's not very high probability. That doesn't mean it's not going to successfully work out. It just means it's not high probability. And I always like to see an actual mitigation of something on the left, like something like this, and then a continuation of price, breaks of structure, change of character, whatever it is. I need to see something mitigate. Having taken liquidity would be perfect. Like range, initiation, break of structure, comes back in. This is the range that would have created if this was the mitigation right here, this range would have been A to B here, and then B to C down here, breaks a structure. If we broke this structure, I'd be playing off of this. I'd be entering right here because it just makes sense. It's logical. But the way they work price isn't in that fashion. They're not trying to trick, in this instance at least. They were just moving price from order block to order block in the way that they wanted to. So then I see this mitigation here, and I do see twin highs, right? Equal highs. And so I was thinking to myself, this looks like the mitigation, because I look left. You always need to look left. What have we mitigated? What have we stopped and pulled away from? And you don't need to have this all on your chart straight away. You can just wait. I'm on a 15-second chart, and so I'm waiting, and I see, oh look, we've mitigated something. What have we mitigated? This is where you have to sort of bring things down to 5 seconds, 15 seconds, because this is where you're going to start understanding what's going on. Here's the range, here's the break in structure, here's the taking of that liquidity, initiating higher prices, break in structure. This activated as what? A buy primary that had no mitigation whatsoever. Excuse my French today, I'm being very vulgar, but who gives a shit? It's how I want to speak. And I'm seeing this unmitigated. And so when I see price come back in and pull away, like it has, breaking structure, it was like, okay, this is the mitigation. I really believe, I've drawn my carrot on top. This is the high. Even with equals, yeah, they're going to come back for this. We know that they're likely to come back for this, because this was a transitional mitigation. This is going to become liquidity, right? In fact, I should have drawn this above to represent what that equals to me. Okay, so there, liquidity, we're coming back for it. When? Not certain. price mitigates here, a great mitigation, break structure, and then this is really what I'm looking for. I'm looking for another sell primary to form something to get me into the charts. And here we do have it, right? Range, initiation, break structure, they come up, take liquidity, and push down, breaking structure again. This is our new sell primary that's formed. However, I've got this drawn in, right? And you're thinking, well, what is that? Well, this was the leg that took the liquidity. So this is actually more refined than from A down to here. That's all it is, refinement. We can use 50% of our ranges to help us identify leg lows, okay? I've talked about that on a different video, not going to talk about it today. So, my one and only trade, it was a loss, unfortunately, a full 100% loss, but minus 1R. But I'm happy about it. And you're going to see why, right? Because my understanding is crystal clear as to what was going on. Yes, we've created this sell primary. Yes, we've mitigated something, a buy primary. It's a reason for shorts at this point. Yes, we've formed this new sell primary from here to here, and we're pushing down. All I'm waiting for is a new lower time frame sell primary to form, and I'm in like Flynn. Range, initiation, break. This is my bread and butter trade. Go back on my vids, and you'll see bread and butter trade. This is it. Range, initiation, break structure, comes back up, takes takes all that liquidity, initiates lower prices. I didn't even look to see if there was a breaking structure. Maybe I did at this time actually, thinking I would. Of course I would, but I didn't see right now if it broke structure. Break structure. I haven't got it drawn well. We'll use an actual straight line, right? It's gold. This is gold. This is your money setup. That's why I call it bread and butter. This is what we want to see. Do it properly. Range, initiation, break structure, creates a primary break structure. Go to your 15 seconds, and this is what I'm left with, right? Here's my primary. A to, where is it? B to C. What happened between B and C? You can't see what happened between B and C on this chart. You need to go to 5 seconds to really see it. But I was on the 15 seconds, as I'm seeing this form, and I get my tool, and I plonk my tool right at the bottom, because I'm thinking to myself, I think it could just nibble, come back up here, touch it, and then initiate prices away. I didn't enter on here. This candle I did not get to enter on. I wanted my stop to cover this as a transitional, thinking they're going to come and mitigate this transitional and then initiate away. I get taken out. I think my something was literally like that. I think this is exactly how I had it. I would have been I was taken out by here, right where my mouse is. That's my spread, right? So I was taken out already by there. And my hindsight, it's obvious I want to get covered. I want to cover the highs of this range, right? And this is just something I'm going to work on and refine. But what I noticed, and this is the reason I'm really wanting to make this video with a mistake on here, because this is learning. We're all learning, right? And this is the best thing to learn from. Is this range is a transitional? Why do I want this to mitigate and pull away? If this mitigates here, let's say price comes up, stops here, and pushes away. That's just creating cause for it to come up, take me out, and then initiate, right? So I'd never really want to be looking at these transitionals as a stopping point, as somewhere where I think price is going to come to. Yes, if price does come to that and initiate away, woohoo! But chances are, if they do that, come here, stop, and initiate away, we're coming back later and maybe creating a sell primary, right? So let's go to the 5 seconds, because we can actually see more clearly what went on, and I'll show you really what I should have been thinking, and how I can trade differently off of this. So here's that transitional that I was using to place my trade entry. Let's get rid of that because that's not really relevant just for the, in the manner I've just been speaking about. Here's our range A, here's our range B, right? So you got A, you got B, and where's C? C's right here, right down here. So what we're interested in is what happened between B and C. So let's look at what happened between B and C, because any kind of a range that occurs in that B to C, like this one, right, is likely going to hold price when it comes back in. We see it happen over and over and over and over again. The fact that this is high as well gives us more inclination or reason to think that this high should hold. Is inside this sell primary, we should at least get a reaction, right? That's what we always think. If we don't get a reaction, we're going to get a reaction when it becomes a transitional. But 90% of the time we get reactions. So, the way in which I should have looked at things was this is the range. Let's draw it in. So I've got the primary range, and then this is the range that occurred inside of the primary. And I should have, in hindsight, protected myself in this manner. Been trying to get my entry here, protected myself with my high above here, and this is the range that I should have been playing off of, not the transitional like I was looking for originally. So anyway, caught it live. I mean, I say I caught it live. I took a loss. It's fine, and I watched it initiate away. Had some FOMO as it was whittling away. However, I did say to myself, golly, if this pumps down and pushes out a nice 10R, what a way to start the new year on your analysis. Just from your analysis, making bank is one thing. Making bank in these markets is tricky, but making the correct decisions or getting your mindset correct this early on day one, trading day one of 2023, that's hot. And so, excuse me, bit of a yawn, but excuse me. So we initiate away 10R almost, immediately, 10, 15 minutes later or whatever. Hip hip hooray, that's a great one. We've got this block up here we're expecting a reaction from still. And so I'm analyzing beautifully, and I look at this and I go, well, where would I expect market to stop initiating from? Or at least have, a reaction. And lo and behold, I spot this on the left-hand side of our screen. Range, did this break here? No, maybe it broke here, doesn't really matter. Range initiation, this range comes in from this high to this low, takes the liquidity, initiates higher prices, breaks structure. Check, 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 right? Checks all my boxes. It's not that many boxes, but it checks them. And so it checks them for what? To be a buy primary. Now I've been able to refine it down to this point, and so this is the actual primary that I was looking at. And what do I see? I see this primary reacts at 50%, up and away. And so now all I'm looking for is on a lower time frame, a new primary to form. We've mitigated here. And so we just give it time. That's really all there is to do. Just give the market time. Is this one here that formed? This is a potential primary that was forming from this A to B. Range initiation, break a structure, comes back in, zips up, but doesn't break structure. This is the last one that I actually noticed that does check all the boxes, right? Range initiation, break structure. Range initiation, break structure. Was it this one? Yes. This range takes liquidity from down here only just. Let me draw it just so you guys can see it. Let's just put it as an arrow just so we can see that there was an actual break. See how this range didn't break, but this range caused that break in structure just by a little bit. Does it matter if it's just by a little bit? No, it doesn't at all. You just need to see the break. So we see that break in structure. They take the liquidity, they initiate high prices, and they break structure, right? Activating this new primary. So as I look between my B and C leg, I'm able to see, sorry, B and C leg, I'm able to see there's one range in here that stands out to me. So that's where we are right now. That's what I'm expecting and seeing and thinking is likely to have happened right now. We've mitigated um we've landed, I should say, into a biprimary, mitigating a biprimary, same thing, right? We've created a new biprimary and we've seen some higher prices. Um, we've came back down into this biprimary and we've formed a whole new one, a small one in here. So what am I expecting? I'm expecting higher prices from this primary. Let's clean up the chart because they're building upon one another. I'm expecting um, higher prices with the knowledge that I understand that these guys are stacking very close together. What does that do? That creates cores, and when we see biprimaries or cell primaries stacking next to each other, 2, 3, 4, what they're doing is they're creating this liquidity to eventually run, and then they'll mitigate a cell primary, and boom, they'll shoot price all the way through. This is what we do every day of the week. Any day the market's open, doesn't really matter what market it is. This is how price is transacted. So, am I expecting high prices? Yes and no. Yes, in the fact that we've just formed biprimaries and we should respect them and trade off of them if we choose to, if we think they're high probability enough. Absolutely, this should get a bounce. That's really all a biprimary tells us. It tells us if it's a range initiation mitigation continuation style of range. Tells us that we should have an initiation, a bounce of some sort. Will it break structure? Will price continue higher? Will we do? I have no freaking clue. You have no clue. No one has a clue unless you are the liquidity in the market, the liquidity maker, and have all the money with stop losses. Incidentally, I was talking earlier about the thing I was listening to with regards to market makers, and they do not trade with stop losses. Now, I knew that the actual makers don't trade with stop losses. They really can't, but it's interesting to see how today's versions of market makers do not need to trade with stop losses either. Like that's kind of like what hedge funds would contact a market maker, and yeah, no need for stops. So very, very interesting. We're the only ones who need stops, but rightfully so at the level we're trading with the margin and the risk and everything. Absolutely, we should be um, trading from trading with stop losses. Sorry, train of thought got a little way sidetracked there. So here's our primary. We're looking inside of it. We see one range on the 15 seconds, but look on a 1 minute, it doesn't look all that exciting now, does it? So what do we think about this? Well, we're not too worried about it. This could actually become liquidity. We always want to see a mitigation of something to the left. So if price lands inside of this blue box that I've got drawn, mitigates, changes character, takes the low, takes the high, then this will be something I will start thinking about trading off of. However, I do also respect and know that we have got the sell pressure. I haven't even looked at, because we've been doing the video, but I haven't even looked at what we've mitigated. So we're going to definitely need to do that. So we take the high, we ray it across. We see that, okay, yeah, it mitigated something to the left here, but what really did we mitigate? And now you can see this was actually a buy primary by the looks of things. Let's see if I'm right. So we're looking for liquidity gets spanked from here. It's low time frame for sure, but there is definitely a range here. So on a 15 seconds, this would look good. So you got this breaker structure here. You got the range, the initiation, the breaker structure. This was the primary range that took the liquidity and then initiated higher prices, breaking on A itself and then breaking B major structure in relative to this time frame. clean up. So is that a valid mitigation? Is really what we're saying. Abso-fucking-lutely. There you go. It's a valid mitigation. So now we've validly mitigated something, right, on our left of screen, and it's not very known, is it? Like as we're looking here, me and hundreds of millions and thousands of others back in the day, I'm talking about myself back in the day here, right? Would look at this going, well, that's just not a crappy mitigation. That can't be it. This is the cause. This is liquidity. We're coming back up. Let's wait for liquidity to take me up here. It doesn't, right? It hasn't just yet, anyway. So what's it doing? Well, when you mitigate a biprimary, a transitional biprimary, I should add, and look at the amount of time spent as well in that area, it's really a good sign because it's telling us some real information here. They took the high, they took the low, they changed character, they mitigated it by primary. Looks like this is going to become the new high for right now. So we've got this high up here, we've got this high up here, and then this will likely become a high as well because it's primary, right? So we've got highs, 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 highs. So we're just initiating lower prices. So now that we've mitigated something, what are we doing now? We're looking for primaries, sell primaries. Just rinse and repeat. I can see one is in here. It's lower time frame. It's not very powerful, but it could hold. So here's the sell primary. Can you see it here? The range. This leg here at the bottom, A to B, pulls down, breaks structure here, here. So there's two breaks of structure, stacks liquidity right up here in this area. They take the liquidity, break on themselves, and then the next thing is we need to see a break of structure before this can activate properly. Break structure. Is this a break of structure down here? Let's see. Not quite yet. So the only breaker structure we've actually got is this guy here, maybe one of these to activate it. So like I said, it's not super duper, not like, oh my god, this is like the best primary I've ever seen. Definitely not the best primary I've ever seen. Will it hold? Will it work out? Nobody knows whatsoever. This could be created for liquidity, but we'll absolutely be interested in taking it. So what is this? What's this high? Looks super transitional to me. And because you can see it stopped in nothing within basically wick, and it stopped over here. And as you can see, there was no sort of liquidity grab. It might have been like a lower time frame thing, 5 seconds or something like that, or 1 second even, maybe even 15. But this is most certainly a transitional. So when we stop in transitionals and mitigate something in transitional, it always becomes liquidity. Relative to the time frame you're on. So I do expect this to become mitigated, this to be taken, and this to at least have a reaction. We don't know if this range here will hold or not. I have no idea, but we do know that it will likely have a reaction. So here's some bread and butter, I think, just shown up. Let's have a little look at it. Range. Initiation. Break of structure. Comes back in. Takes the liquidity from the top of the range. Initiates lower prices. Breaks on itself. And the only thing we need to see now is a break down here. So if we can get a break of structure down here before we return to this block, I will be trading this. Will I be trading it with a limit? No. I will wait and see what occurs because the B2C leg isn't offering an awful lot. There's this leg in here, which looks like once it broke structure, it kind of connects in and then zips away. So that could be interesting to us here as well. Like this range right here. Then you've also got, as the high was made, you've kind of got something in here that could be reactive as well. So it's impossible for us to know where we're going to react from. I like the connector though, so we're going to see sort of what this connector does. So if this connection here does mitigate break structure, that's going to give me, it's going to put me in a tricky situation really, because this formed but didn't get any break structure. The only structure we've got is here. We've got nothing else to structurally break, and it just made equal lows. So does that count as a breaking structure? To me, it doesn't. So I might even end up leaving this one, but it's just I'm just trying to talk my thought process and my trading process with live price action right now. I'm just trying to sort of show you what I would be thinking with current price and as it's moving. So there we go. That's my video for today. One trade, totally connected, totally hit. I didn't profit on it. It's a big bummer that I didn't profit on it. That would have been fantastic for the new year. One trade only and one, start win. But I am looking at this as a big positive because I'm reading price action incredibly. I feel rested. I feel really good about the new year. I'm excited to jump into trading and really just start making this work for me. I'm considering moving to futures, the futures market. And the reason I'm considering moving over to the futures market and trading the ES uh, is because of liquidity. Beg pardon, not liquidity. Well, it is liquidity. It's my spread, is what I'm having a hard time with. It's my spread getting taken out with 2 pip stops. And then realistically, I've only actually got like 1.4 pip stops. It's very tricky to trade like that, and I found it not very feasible, and it's really like not doing well for me. It doesn't make me feel good to break even a lot, and I do break even an awful lot. So I'd be looking at soon taking trades on say the E-mini S&P, or even like I think it's called 6F is the futures code for, or 6E maybe for the EU, because we can trade EU on futures as well. So I'll take a look. I'm really not 100% made a decision on that just yet, but it is something I'm very interested in, and it feels like something that might be sort of of interest to me. So as we can see here, we got this range. Looks like it's getting penetrated right now. Remember, this was that connecting range, so it's very interesting sort of seeing what happens in that connecting range. It's gone through it. So that leaves us with, are these connectors as well? This is the last connecting range right here. So we see a connection, all the way to the top. So this is actually the range I'd expect to see now react. If this one's not going to hold, we can get rid of that. What's the point in having this range hold? Why would we hold that range? We've already mitigated the open. Do we need to mitigate more? That's the question we need to ask ourselves. So I'm kind of leaning towards this is maybe a mitigation. So what would we be looking for? Take the high, take the low, change character. What does instigate a change of character? Look at these. These are all 15-second candles. The first 15-second candle to go was kind of in this area, and so there's your change of character. Do you need anything more to get involved? This is a very high risk trade, not one I would just sort of jump in on. So now we've had a mitigation. Now I'm considering it a high risk trade. What am I going to look for? I'm going to look for a new sell primary to form on a lower time frame. Maybe we're going to see one now. Here's a range. Are they going to take it? I really like to see breaks of structure though on all of these. So here's a range, break of structure. Here's the structural break. Here's the low, and then they're still forming. Well, what happened here? I don't know really what happened with that spiky candle, but you could say this is the low. Argue it. Definitely all gone now. So let's just not worry too much about that. So why would it be this range? This is the ultimate question. Why this range? Why not this one? Why this one? It's already been mitigated to the open, so does it need more mitigation? Kind of needs to keep looking left, right, for clues. Was there any sort of primary action going on here? Did they create anything? I'm really not seeing anything sort of created from this range, but look at the reaction we get. And so, why? Always ask yourself why. I'm gonna cut this video off here. If any more like crazy cool trading activity occurs between now and the time I shut down for the day, I will do an addendum video. But for now, I think this is good. Got some good information out here on the video. Hope it helps somebody. If you're listening, awesome. Aloha to you. Thanks for watching. Thanks for being part of all this. Hope you're doing amazing. Hope you're smashing it. Hope you're making the crap ton of R. Hope you're having an amazing new year so far, and I wish for you the absolute very best. I really do. So, aloha, and I will catch you soon.